me into my zone. Let me into my zone. Let me into my zone. Let me into my zone. Please don't.
Ring, ring, ring. Hello, please, and welcome back to the magical Krown's Dildo Cave.
Hey, this is a family channel. What the fuck are you saying over there? Well. Welcome back to Krown's Dildo Cave. It's a nice little Sunday morning over here from Helsinki, Finland. Nice and overcast, still dark at about 9 a.m. So giving you an idea what it kind of looks at in the outside weather right now. And we got a lot to talk about on Bitcoin, a lot of long-term analysis to be discussed today. And with all of that said, there are actually some pretty major opportunities coming up with Bitcoin, I do believe, in this next coming weeks. And of course, we have initiated some absolutely massive things as well in the meantime. So that's going to be the discussion of today. I'll start off with the lower time frames as well. And before we get into it, I actually just wrote down all the things that I need to make sure that I actually do announce. Let me just make sure I get into it right over here. For the Krown trading application that all the people who are in the program have access to, there is a major new update, of which you can expect major new updates coming pretty regularly, like at least every week. And so this one that just came out is going to be the first. Let me just explain what's happening here. The new things is the first iteration of the video player revamp is now showing video categories, and that's going to allow us to do a lot more in the future with regards to note takings and timestamps, and just more things that add value that the former venue did not have. We also added the update checkup, so you're gonna automatically see if there's an update ready. So just run the application, and it should go through. What else do we have? We added program sync to user accounts. So again, if you're not in just yet, make sure to follow that email. You should be good. If you didn't get an email, just reach out to either myself via DM or Mournfall, or if you're in the Discord, just go to the Krown Trading application channel in the members section, and you get your access routing over there. We also have data API optimizations, transferred most data to SSL protocol, optimized deliveries. There we go. You can see that I'm like reading off a script right now. Added trading psychology series as well as a little bit of a bonus. And for the people in the technical analysis program, I actually uploaded a new video last night, and it's a video that I've been really putting off making because I just one of those topics that I fucking hate, man. I don't hate it. It's important, of course, but getting all the thoughts together was a little bit of a pain in the ass. And that was the gap theory and gap trading strategies new module. So it's both on Teachable and on the new venue, of which we'll go over to the new venue right now. Let me just bring it up, or actually we won't go to it just yet. But Krown Trading Net is the new venue for all of the Krown Trading activities. Of course, we're going to still keep it up on Teachable for all the people who don't want to, migrate on over there. It's going to be available in both places, but do be aware that all the updates are going to be coming on the crowntrading.net website, and that's where all of the more cool features are going to be coming. So a really big focus for us right now is to make sure that this new website is going to offer a lot more value than what you saw on Teachable, even though Teachable is pretty damn good. That brings me to my next thing. All programs are on sale for the next week from today, like this moment right now, just hereby declaring this, till next week. It is Thanksgiving week and also Black Friday, so merry holiday season for those of you who are celebrating out there, and for those of you who are not, no discount, bitches. No, just kidding, of course. But it's already doctored in. There's no coupon code needed or anything like that. In fact, I'll just go quickly to the live scene right now, and we can actually look at it together. Come on, baby. Over into there. And here it is right here. And this is the new website, and there you go. Anyways, with regards to all of this, like I said, the coupon code is already integrated. We still have a lot of things to kind of work on as far as like the explanations go, but there is a video explaining both programs, of course, and like I said, there's a free psychology series on there as well. It's the same one that's on YouTube, of course. So with all of that said, what else do I want to get on to over here? Yes, started a new playlist last night with the man, the myth himself, Mr. Jackie. A lot of people here are familiar with him. In the Discord, he goes by C Jackie, the Permabear, I believe it is right now, or like the Ultra Permabear, or something to that effect. Really enjoyed that talk, and I'm really looking forward to doing more of those videos. It actually got a pretty damn good response, which I think is well deserved. He has a great story, and I'm really looking forward to bringing on some more people to do something similar as each and every week passes on. Anyways. Let me get onto this scene right on over here. weird shilling yourself, of course, but I do want to make sure that the people who are interested in this and who have been waiting for that do have full access for that. And of course, I should also explain that for the programs, there's always payment plans. You don't have to pay it all up front. I understand that for most people, that's going to be a little bit unreasonable. We wanted to price it in a way, or offer up a payment plan in a way that would be like akin to a college course, like a college semester course. So we do offer up to 10 months payment plan. For that. Anyways, getting like all over the place right now. Next up, I'm hoping to bring on Jacob Canfield this coming week for a similar talk to Jackie for this, I guess we'll call it like Krown podcast. It's like, great, really fucking original name, bro. Sorry about that. Well, I'm not the most creative person of all time, but I really, really like his story as well. He is a verified trader. He actually shows his trade. That's awesome. And he's just, I really like the guy just in general. We have a very similar style. So does myself and Jackie. And you're gonna notice that a lot of us have very similar styles. I'll obviously bring on some more people in the in the future. I really who have different styles. I want to bring on one of my friends, if possible. I don't know if this is gonna be possible with this current firm, because there's gonna be like NDAs and whatnot. Because every time we fucking talk, he's like, hey man, I can't technically say this, but I'll tell you this. It's like that kind of shit. But he's one of the higher ups at a at a pretty prominent quant firm in Chicago, and I think it'd be really interesting to hear his sort of story, and more importantly, his sort of strategies and what's different about the quant side of things, and also the market making side of things for people who are interested in cryptocurrency land. Of course, market making in general, we can talk about that in traditional land. I come from an options background. I was an options market maker in equity options, so we could maybe bring on someone who's from that realm as well, if there's interest in that. I have a lot of friends still going back, which would be pretty damn cool. And but I know that people want to kind of keep it focused on crypto here. And yeah, keep an eye out for that series being updated each and every passing week. Anyways, what else do we have to say? I always want to remind myself to talk about this. There's someone scamming people with a similar email to mine. I'm not going to email you and ask you to like give me your money to trade your account. I have no interest at all whatsoever to trade your account. I'm very happy to trade my own account, and that's really all it comes down to. It's pretty much a fucking scam. So you're free to do whatever you want if you want to give that person your money, but I can assure you that it is, one, not me, and two, very unlikely to be true either. Not only that, man, it's like that's like the antithesis of this channel, man. I'm not interested in trading anyone else's account but mine. And that's really the thing, is like I don't really know too many successful traders who would see much upside in trading other people's account rather than their own. I mean, it's much more rewarding to, one, trade your own account. Two, it's more profitable to trade your own account because you're only getting like a small percentage if you're trading other people's accounts. And then three, it's just less added pressure. I mean, it's also technically illegal if you're not like a full-on financial advisor, which I am not a financial advisor. I'm a registered market maker, or I probably don't have my registration anymore. It's got to have expired by now. It's been about a year since I hung up the boots, I suppose. And what else do we want to talk about? Yeah, I was also curious what else people would kind of want to see on this channel. A lot of the feedback was some forex scalping videos, so yeah, I can certainly do that. I don't know how interesting it's going to be, but I will start a streamer account this week. I'm going to start it off with like a low amount so that it's so that it's we can just go over just how fucking technical it is. I'm going to start with like probably just one Bitcoin in that account, and I'll kind of just document my trades here and there and see how much I can build it up in whatever time allotted. What else? We have memberships now on this channel. The join button is below the video. Of course, don't feel obligated to do it. I'm going to be uploading these videos for free no matter what. But at the end of the day, if you do want to support, and if you do want a little bit more priority with getting your, with getting seen in the what's called in the YouTube streams, in the live streams, that would be a good venue to do it in. I've been doing it in a lot of other people, not a lot of other people's, but a few other people's live streams as well, just because like this one guy's been helping me out with basically all of this, and having that feature was really, really useful for myself instead of like donating every time that I wanted to be seen. So I wanted to offer that up. Don't feel obligated again. It's all good. Like I said, this is, it always feels weird shilling yourself, but I do want to make, I do want people who are interested in that sort of thing to be aware of it. Other than that, I think that's it. I would like to wish you I would like to wish you the happiest of the happiest and the best of the best. And it's backwards today, baby, as my glasses are once again on top of my head. I fucked up this morning. Anyways, starting off with the daily on Bitcoin, we have confirmed the daily total death cross between the green 55 and the purple 200 right here. Put a lot of weight on that for the longer term trend. Now, usually when we actually do confirm this cross, we will pop back up and test around the next major relevant area. In this case right here, the next major relevant area would be around 7,600-ish region. Typically, I do want to see like the next the next like major moving average tested, preferably the 21, but that's all the way at 8,200. I think that's a little bit well and far away from what we're dealing with right now. So it'd kind of be asking a lot is what I'm trying to say. Let me just make sure that we're recording. We are recording. We also are. The mic's also working. Okay, this is great. Anyways, let me turn that off right on over there. There we go. Okay, beautiful. Anyways, so yes, while the longer term trend is starting to be more and more nasty, especially with the way that we closed the weekly on CMEs and GBTC, I would actually be looking for the lower timeframes to probably bounce up into this early this coming week. So once we get the new weekly, I probably would be looking for that bounce, probably 7,600, and that's gonna be the next major relevant area. After that, we have about let's just mark it off right here actually, and you can see that I have a fresh new chart. So this would be the 7,500-ish region right here. Let's go. Where's my 76? It's going to be right there. And this is kind of like a nice little liquid zone, if you want to call it that. I'm going to put in a nice little blue box territory there. Perhaps I do try a trade. We'll see how it kind of comes about, and put it right there. And then the next major region that I'd be looking at is basically this breakdown region right here, which is about 7,850, 7,900-ish region, which you can see that the 377 and the 10 simple are going to be converging on that region relatively soon, and also getting this liquid territory from our end of September, early October region right here. So those are kind of the two major areas that I'll be looking at for this coming week, and I'll probably be trying trades around there. But in the lower time frames, actually, it is looking like Bitcoin. Let's actually go to an hourly. This is one of the few times I will go to an hourly. Technically speaking, we are kind of printing or potentially printing an ascending triangle off the lows. We have seen a lot of ascending triangles actually actually reverse structure, at least on the lower time frames. Something like this is what we're looking at right now. So we will be forced into a decision. Looks like later tonight. The apex comes in somewhere around here. That's going to be basically late tonight. So, somewhere around here is where we typically will break. So that's going to be actually midday for myself. Very likely that we do see this break. Whether it's the upside or the downside, I don't really care. This offers up an edge, right? And as a trader, that's really all that you need. In fact, we can make a measure move based upon this. And if we were to break this to the upside, you can see that would put us right smack dab in the middle of that next blue box territory at about 7,600. If we break to the downside, we will come back down and retest around the 6,900 region, if I had to guess. No, $7,000 region, which I actually kind of think is a little bit more likely, to be fair. The reason why I say that is because I'm not really seeing the things that I want to see on this current price action to think that we're just going to like bust through to the upside like right now. But again, my opinion on this is irrelevant. Whichever way that we break from this is the way that I'm going to be trading this. Any sort of an hourly little closure below, especially this local low right here at about 7,180, then yes, I will target a move down to about $7,000, and any sort of an hourly little close above about 7,350, and I would target a move up to that 7,600-ish region right here. So like a $300 play at this price point is almost 5% play. That's pretty fucking good, to be fair. There is opportunity in this game right now, and the thing is with the downside, and why I do think it's a little bit more likely is, we did close a 3-day above the critical territory that we spoke about yesterday, the 200 exponential moving average right here, the purple moving average that we did speak about. So I actually do think that we bounce up coming into this next week, but I wouldn't be surprised if we do pop back down and test around the 200 simple first, put a nice wick in right there. And where's the 200 simple at? 7,000, baby. So it would be lining up with that downside target if we do break this ascending triangle to the downside, which is certainly very possible. I've seen every goddamn pattern break out every possible way that you could ever think of, even to the left sometimes with rollbacks. It's actually quite true. But again, make no mistake about it. The higher time frame trend is down. Pressure is down. There is great pressure down. But because we're dealing with big numbers here, we can have nice little relief rallies here and there. I think it is appropriate to say I am in no way, shape, or form overall bullish, as long as we're especially below this lower high right here at about 9,500, and from the more macro standpoint, as long as we're below about 11,500 on a weekly total closing basis. I'm not looking for Bitcoin to go back onto all-time highs. In fact, looking at this area once again, I do want to draw attention to CMEs right here, which remember, they're closed for the weekend. We have been following this channel for the last Jesus Christ, 4 or 5 months, ever since July. So this is actually still getting filled out. And this is where we did kind of stab down towards on Friday. I don't believe I showed this on Friday. I maybe showed this on Thursday perhaps, but I just want to, go back to it and document it that, hey, it is holding up for right now, and probably good enough for a little bit of a bouncy bounce here. Remember, CME is going to be opening up a little bit later tonight at 5 p.m. Eastern time, I believe it is. It's kind of it's hard to get it now with all the time changes. I don't really stay in tune with that because I also don't really care about time. It's a man-made obstacle is what it is. It's an illusion, my friends. It's a fucking illusion. But yes, you do see that this liquid territory right here. I am going to be using to kind of govern the next sort of washout move to the downside. So as long as we're closing daily dildos, especially above, let's call it like 72.50, I don't think that we have the next trending leg to the downside. But when we do, I would be looking for a move probably back down to about 63 to 6,400. That would be the next target that I'm looking at, which I'll mark off right now. It's going to be coming back for them Gap Boys back around here, which again, that the new videos goes into great detail on the trading strategies for those, for those plays, as cryptocurrency land has a very interesting way of of playing them. So fair enough. Anyways, so yeah, this would be my next area if we do break down. Falling channels typically do break to the upside, to be fair. However, we can stay in falling channels for eternities, technically speaking, and it's not until we actually break above the top side of resistance where it becomes actionable as a trader. So we're nowhere near breaking to the top side of it. And for all the people who just blindly longing right here and expecting us to break to the upside and move our way back to probably measure move is going to bring us back to this local high right here at about 13,000. Very, 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 very far away right now. So I don't really think it's actionable. In fact, looking at momentum also just on CMEs, we are going to see daily RSI create a little bit of bullish divergence here between this point and this point. They're kind of far away, so I don't know how much I trust it. But where could that land us? Again, the next sort of major relevant areas, especially from CME perspective, are actually going to be right around about 79.50 to 8,000-ish region. You can't imagine that the 21 is going to work its way down there as well, alongside the 200 simple. So if we do see daily Stokes turn up on CMEs, which they are starting to show a little bit of interest with that, and we do see bullish divergence confirmed on daily RSI, which would be confirmed if we do get above Friday's high at 77.35. So it's got a lot of work to do, to be fair, a lot of fucking work to do. Then yes, I'd probably be looking for a move up towards this region right here again, high 7,900 to 8,200, we'll call it, into that pocket, and that's probably going to be my next potential trending play if I can get around there. So yeah, I do think that this week probably does bounce a little bit to start it off, and then after that we'll it's hard to reverse the trend like this, just as it is. So going back into lower timeframes here on good old Mexico, what do we see? We do see 4-hour Stokes to the upside, and they are starting to break above. Yes, we are now, we're going to have a chance to officially break above the bearish control zone here, which would be welcomed. We haven't done that in about a week. Sorry, maybe 2 weeks. Yes, 2 weeks about now. 14th of November was the last time that we were above. Like a small stint. It was actually more of a fake out than anything. Anyways, looking at 4-hour RSI, we actually still have no bullish divergence to be found here, which is very scary to me. In fact, we do potentially have hidden bearish divergence. Let me just mark this one off. Technically, no. Or let's see. This one's ticking at 33.8. This one's ticking at 33.4. Now, we technically do not have it. But realistically, I mean, this is, to me, this kind of looks like it will have one more washout move to the downside, and then we might get that move up. Going over here to the 3-hour, let's see how we're doing right here. Still below all major moving averages, trending below all major moving averages, to be fair. We see 3-hour Stokes getting a little bit tired, which are going to be brushing against the bullish control zone right here. So naturally speaking, there typically is going to be resistance around that region. And that is also why I'm thinking we have a little bit of downside here. And I do believe that we certainly do have some hidden bearish divergence here between this point and this point. Actually, even this point and this point, which is even more nasty because that correlates with this 7,600 high, and we're literally all the way down at 72. I mean, we're literally almost more than 5%, like 5 to 6% away from that last. Oh my god, that's pretty nasty. So yeah, I do think that we wash it out one more time to the downside first, and then probably pop back up. But again, whichever way that we break this ascending triangle here is going to be the winner for myself as a trader. I'm just providing my my thoughts as they are. At the end of the day, the way to trade is the same essentially. So yes, let's go over here to the 2-hour. Let's see what the 2 hour is doing. 2-hour Jewel is going to be lining up for a little bit more of a constructive play. We actually did get a pretty damn good buy signal on the low. This was at 10. Let's see where this was. So yeah, this wasn't on the actual low. This was on the 7100 tick right here before I moved to 7350. So again, a decent move, but I wouldn't expect that to reverse trend or anything like that. We actually do see 2-hour Stokes headed down right now, and I believe 2-hour RSI is giving us that same hidden bearish divergence as well. In fact, yes, indeed it is. Although I would argue that that's mostly played out as of now, but momentum, Stokes turning down as well is not the best signal. Let's see. Hourly RSI. Do we have any hidden bullish divergence? No, we do not. I mean, the hourly momentum oscillators are down right here. So yeah, I think it's a little more likely that we do have another move to the downside and then probably pop back up, wash out some early people, if you want to call it that. The great saying goes, even if you're early, you're fucking wrong. Just making sure that the cameras are working. My glasses are on top of my head. Sound like a fucking moron. And there we go. Anyways, okay, cool. So what else do we want to talk about? Let's go more into the higher time frames here, and then we'll get into the long-term analysis. 12-hour. Could the 12-hour move up from here? Do we really need that next washout move to like $7,000 region? The 12-hour looks okay. Still no bullish divergence at all. What to be seen anywhere here. On 12-hour RSI. I mean, that I really want, I am not going to call it any sort of reversal on trend. And this is just like an easy tick, mark off the box. I'm never going to call it like a major macro reversal unless we have at the very least bullish divergence on like a daily RSI. So if we don't see it present on a 12-hour, that's just not fucking good enough, man. We do see the 12-hour 10 symbol coming in right around 7,600. So we could have a quick wick up there and then still find ourselves back down in the bottom side of the range. Trend is down on all time frames up to and including a weekly, and I think even a bi-weekly now as well. Yes, the Jewel is going to be lining up kind of soon, but this can still take like maybe all the way up until here. So this would be like first week of December, where it might potentially line up for a good buy signal. I should say this though. Daily Jewel providing buy signals has actually called all of the major mark cycle lows, I believe. Yeah, so we called this guy right here. This was a perfect buy signal right here on the last low at 3,100. It also calls the highs as well too. So pretty damn good. Oh, by the way, for all the questions about the Jewel, it is not available right now. It has not been available for like a couple months actually, or like a month and a half maybe, something like that. We're gonna release the Jewel when the application is fully ready for public launch is what we're gonna do. But going back into 2014, 2015, we do see the last daily Jewel buy signal as well. If we can get a chart that actually shows it. So those are major things that I'd be looking for to actually confirm a reversal or potentially be insightful of reversal of trend. And yeah, let's just confirm it right here. Yep, another almost the exact same signature that we got at 3,100 right here. Yeah, right there with the white actually above the pink. But this is a good buy signal in a good area, and we could go further back as well. And I do believe there's a couple more iterations of it, but I don't want to get too stuck in this because I want to talk more about longer term analysis, of which this kind of is. But just to show where the daily Jewel is right now, it's yes. It's in a more critical region, which it doesn't very rarely in history does it get this far down. It has gotten a little bit further down. Of course, on the 3,100 low, we did get slightly further down, so we certainly could move further down here. But historically speaking, it doesn't like to stay here for too long. So we're more in a bouncy area than not. However, this is not lining up for a buy signal anytime soon. In fact, this is still pressure down, and you could imagine that we won't get like an actual buy signal. Like even if things were to flatten out here until like at the very least early January maybe, and then more reasonably speaking, like somewhere between January and February is where I kind of think. So yeah, still far away from that, and that has been a pretty damn good tool in the past. So just looking at overall structure here again, all trends are down if you want to make it as simple as possible. And realistically, right now is the time to be taking things level by level, in my opinion. If we do move back above that 7,600-ish region right here, that little liquid zone that we showed on BitMexico, even on like a 4-hour doodle time frame, then yes, I would go to the next relevant region up to like 7,900 to like 8,200, we'll call it, somewhere in that liquid territory right there. And if that area gets taken out, then the next relevant region is going to be right here. That is 82. The next relevant region after that's going to be about 85, 8,600, which is where the death cross is occurring right now. So, we're well and far away from that. And at the end of the day, death crosses on Bitcoin, even as much as a 4-hour dildo time frame, which we got, way back on over here, which is when I sent out that tweet. I think this was November 9th, I believe. Yeah, it was November 9th when we got the 4-hour dildo death cross. Or no, it actually happened afterwards, but I sent out a tweet on November 9th. I forget why. Oh yeah, we broke this structure, and that's when I became very, very bearish on this. Even though I've been buying some bounces here and there, they've been nothing more than that, just bounces. So it's not the sexy play. The real play has been to short. So if you've been shorting, the bounces, that's really the better trading. I've not been trading this as like optimally as possible. Just, I'm not perfect. And that's why I would never do a signals group. It's like, one, I'm not perfect, and two, we all have different styles, right? And I'd rather give up, my sort of information, because people, especially in the members community, have been doing much better than me, on this hold down right here. Now, of course, I've also been kind of focused on other things as well, but I want to give credit where credit is due. Like that's what we want, man. That's what we want. Because then also I can, those people are going to come up with their own strategies over time, and then I can gain something from that. And that's when the whole community gets better. And that's what this place is all fucking about, man. And that's why I really want to stay away from like being a signals person, because that's just, it doesn't help anyone, and it more so hurts people than helps them, and it also hurts myself as well. So it's also a selfish endeavor. Just looking at 4-hour RSI once again. Do we? Yeah, we don't have hidden bearish divergence here. So yeah, if we do have another washout move to the downside, I do think about $7,000 give or take, because we're not really seeing it on anything more than a 4-hour. It's just 3-hour and below, which I don't really put more for like a $200-300 move, of which that would kind of line up with that. Okay, cool. What else do we want to get to? Yeah, let's go over here to the 12-hour. Once again, we do see 12-hour Stokes up. They are kind of breaking this trend line that you can, if you just run a trend line right there, you could see that it is getting broken. Of course, we do have another, we have another one coming up right here. So, this probably lines up with a bounce coming up early this week is what I'd be looking for, into like the mid to high 7,000s, very likely. And then we'll reassess from there. Historical volatility percentile, even on the 12-hour, is starting to expand a little bit off the lows. More importantly, we're above the moving average on this, so I would look for this to sustain its expansion, and that's probably going to call the next, once we start to get into like the yellow territory, this yellow territory, not this yellow territory, but this guy right here, that's probably going to call the next like bounce high, if you want to call it, if you want to relate it like that. What about daily? How's the daily doing? Daily stuff. Oh my God, this is so crazy. Like the daily didn't even really expand that much. That's so fucking crazy. I mean, that just shows that we could really have a lot. We could really have a lot more on this move. Daily Stokes are going to be crossing up, I'd imagine, but it's not until they get back above that critical zone where it's even interesting to me. They can stay down there for quite some time, and they will stay down there for quite some time during strong trending moves. Do not trust your indicators counter trend in strong trending trends. You want to be looking for the indicators that give you the signals that are confluent with the trend, not the counter ones, even though they are certainly playable. And that's what I've been doing for the last like 2-3 weeks in this region. Even though I've been bearish, it's not good trading on my behalf. I want to be very direct in saying that is not, in my opinion, it's not good trading. The real plays should be had were shorts, of course. Anyways, go over here to the 2-day. What's the 2-day looking like? 2-day Stokes still fucking nosediving. They got plenty of room here, and these have been more or less good for trending moves. 2-day RSI could create some bullish divergence here if we do set in a local low here. But that is going to take at least another 3 days to confirm. We'd have to stop right now, somewhere around like 7250, 7300-ish region, and then on the next 2-day dildo that we're going to get tonight at 7 p.m. Eastern Time, we'd have to take out the high of this one, which currently is 7350, and yes, then I'd probably look for a move. I'd look for that move at the very least 7600, and then probably get a test up to 79 to maybe low 8000s, like 81, 8200, and then I'd probably be looking for the next play there. So yeah, let's see. What about the 3-day? What's the 3-day looking like? 3 days going to have no bullish divergence to be found at all. In fact, we have continuation most likely. 3-day, 200 simple is what I'd be looking at right here. And more importantly, we do have that very nasty cross between the 21 and the 55. I haven't referenced this at all recently, actually. But let's actually do a little bit of a dissection here. And let's actually keep this guy on. There we go. And I almost want the 10 simple. There we go. Okay. Well, 10 simple is just going to make this a little bit more nasty. But here's the way that I look at this. The 21 and the 55 on the 3-day is pretty good for overall trend. And then using the 10 simple to kind of like govern, okay, are we losing it right now? Are we still okay? You can see that when they're across the upside, when we have the bullish cross with the lower period above the higher period right here, that sets in your next, like 3x from this $5,000 region almost to $14,000 right here. And when we start to like really lose a 10 simple, we do kind of stutter around it right here, and then obviously right here with a more bigger washout, that's when the party's over, right? Going back into the last few iterations of this, we get the last bearish cross right here. And then, it plays out the whole way basically from here, which calls kind of like this, it tells you to sell this $10,000 top to 3,100. So again, another phenomenal move. And then before that, on the market cycle, before that, we do see that it essentially leads us all the way up from, what is this price point? 22nd of October, 2015 at $255, all the way to almost $20,000 price per Bitcoin. So nice. Fucking nice. And then of course the death cross before that. It's not a death cross. Oh my God, I can't believe I just said that too. It's so embarrassing, man. It's so fucking embarrassing. But what I mean to say is the bearish cross on that one happening right here and getting all of this movement from this $600 high to the $160 low. And then if we went a little bit further back, we can get the last bullish cross before that as well, which led us all the way up from here to here. So pretty damn good. And the reason why I like this one is because we can use a higher time frame with lower period moving averages, and we get a lot of iterations on it. Whereas, if we're using, if we use like another combination on other time frames, I always have that thing in the back of my mind. It's like, are we there? Have we really done it yet? Do we have enough iterations to really make good trading decisions based upon this? And, I think that this one's like a good medium for that. It's like is it Little Red Riding? No, it's, Goldilocks. Yeah, she's the one. She's that bitch who's trying to figure out which one of these porridges is too hot and too cold. What the fuck is that even about, man? The fuck is that? What are we trying to teach kids? Anyways, do we have a head and shoulders on the weekly? Yes, we do. Technically, target on this head and shoulders is quite nasty, to be fair. Let's actually go to a fresh chart. Let's see, do I have it right here? No, let's go to another fresh chart. There we go. Yeah, neckline would be 76.50. Very lucky that we actually break that on today. We're well below it right now. And the measure move on this would be pointed us down towards about, low 4,000s. I know Peter Schiff is saying that the target's like $1,000, but he's a cheerleader, not a trader, is what he is. I fucking love that, like, okay boomer meme. It's great, man. It's fucking great. Okay boomer. Very smooth. But yeah, man, I think he's great for his trolling tendencies. Cause like, I think that he probably knows that, or at least enough, he has like smart people around him to say, hey man, that's not what it's saying. It's not saying that we're going to go to $1,000. It's saying that we could go to about 4,000. Of course, measure moves on formations don't always have to play out fully to the T, but it does really make me think that we will end up seeing the lower 6,000 region around 6,400. And if a bounce fails there, then I'd probably be looking at about 54 to 5,500. And if a bounce fails there, I'd be looking at a move probably towards the 200 simple or 200x Benjamin average, which are going to be more or less around this region, or actually the 200 simple is well above, but perhaps then I would be looking at this region right here at the mid to low 4,000s. And we can actually line that up with a lot of different things, in fact, but I'm going to get rid of this right now. Or do we want to keep that in for now? I'm going to take a more lenient measurement on this one. Let's just kind of apply that down. This would be suggestive of about 43 to 4,400, right? And I do believe that is going to be where the 377 is likely coming in. Whoops, wrong one. Let's see. Let's go over here to BLX index. Yeah, the 377 will be kind of crawling its way up above or around there longer term. And we actually do have the 786 Fibonacci retracement from the ultimate high to the ultimate low of the past market cycle within that region as well. So I do think that this would be, if we did come back down around there, I'm going to be trying trades around there. So my big areas for very likely bounces and potential reversals are, one, the area that we're currently on right now. I think that that's unlikely to provide a real reversal. I do think that it provides a little bit of a bounce. The next area that I'd be looking at is, again, this 63 to 6,400 region. I'll just put it right there. The next one after that is the 5,500 region right here. And the next one after that would be that full-on measure move down to the 4400-ish region that we just saw. So those do line up with a lot of other technicals, which I do really, really like longer term. So I'd be willing to bet that one of those areas is going to be where we do reverse from, and all of them are going to probably provide, at the very least, tradable bounces. Tradable bounces meaning like, more than 5% move in the other direction. So what else do we want to talk about while we're here? While we're on the weekly, let's actually look at this. Weekly jewel is in a bearish posturing. This is not, you really want to see a signal like this coming up in this region right here. That's when they get very, very powerful. But this does look like a continuation or a hodl your short signal is what it looks like. This is a beautiful sell signal right here. I mean, oh my God. Did that call the ultimate high? Yeah, it did. Nice, very nice jewel. It's like talking to your indicators. It's like taking it one step further than talking to price action. How crazy can I be in the second camera? I don't know. Anyways, we do see weekly RSI getting very comfortable in the bearish neutral zone. This is a very bearish RSI, getting rejected by the exponential along the way. Can't even maintain in the neutral zone for for more than a dead cat bounce here, and straight down. Looks to me like we want to stay in this region for quite for a little bit more of a prolonged time, which is going to give us the opportunity to really do some damage to the downside longer term. Also, just looking at moving averages, of course, I've been focusing a lot on this, which probably is boring the shit out of you by now. But the 21 in the yellow 21 and the red 10 simple right here, having that bearish cross that we see, which has precipitated a lot of market moves to the downside. This last one right here, calling this whole next year and a half to year of downside before the lows put in. Time before that was this bull trap right here, and then this one not getting the moves all that well, but good enough for it does tell you about the momentum longer term, and of course the downtrend resumes the whole way through. In fact, just looking at weekly trend, anytime that we printed lower lows and lower highs on a weekly, it's always led on to a 70% more or greater correction. Timing on that, not so consistent, but it does typically produce similar results to that. Not only that, but just even looking at the 21, I mean, of course we were speaking about this all the way through the run to the upside. As soon as we break the 21, that's likely when the party's over. And while we did chop around a little bit right here, as we did in the last cycle in 2018, just simply breaking it after that first major splurge to the upside is that big bad warning signal that we are no longer doing the full-on bull steam ahead. And every time that we've broken it, that is party over time. And of course, when we look at the slope of both the 10 simple and the yellow 21, that's actually the most advanced way of telling you that the party's over. Of course, we get a negative slope on both of them right here at about 10.3. That was a big area for me. That's where I turned really bearish on the whole picture. And the time before that was back on over here, telling you right around 13,500, or sorry, on this dildo right here at about 14,500, or all the way up to 16,000 as well. But both of them getting a negative slope and then forcing price action down. I mean, we can, again, just kind of mesh this one out, something like this, about 76% down. Before that, we had no negative slopes on both. It needs to be on both of them the whole way through here. The last one before that was obviously right here. They both get a negative slope and 75% down. And the last one before that was this guy right here and 57% down. Well, depends where you take it from. Do you take it from the prior high before that? You could do that, and that's 71%. So yes, I think that's a little bit more appropriate. And then same thing right here. They both get negative slopes. So you take the last high, measure it down to the next low, 76% right there as well. And then again, this is a little bit too high of a time frame to have more iterations on it. That's why I like the 3-day a little bit more. But you can see that it does have that same sort of signature. And if we were to just spitball an area out here, taking shaving off like 70% off this price action, where does this put it down around? Well, 4,300, 4,400, which remember, that was also the what was it, 786 fib right here, or maybe it's on BLX index. It was a 786 fib. Hey, where are you? Fuck, there you are. 786 fib right here in that region. Also going to be around our 377 exponential moving average, which is right here. You can see that's going to kind of crawl its way up. It's going to slowly but surely make its way there over the next like 3-4 months. And on top of that, that is also the measure move off of this head and shoulders formation. And well, it's very consistent with what we've seen historically speaking. In fact, we can take this a few more steps further. If we were to go back and put on this indicator, which we had been watching this past week, although I haven't really been following up too much with it, this is the Bitcoin hash ribbons, which have which speak to like the minor impact on price action. And we did get the bearish cross of this earlier this week on the 17th of November right here. And it's flirting around with it quite some time. And then now we're getting that divergence, which says that, hey, this wants to play out. So I do think that we're going to get a similar signature to what we got right on over here. This was start of November, essentially, of 2018, which was this move, this move right here. So we get this, hey, that's not what I want to do. We got this move right here, about 52% down from signal given to next low. What would that look like on our current area? Where do we get the signal? We get it right here, right around 8,000. Well, I mean, you can just do this one in your head. What's 50% of 8,000 down to low 4,000 essentially? So again, another thing suggesting in that region. We can get rid of this right now. Let's take it one step further. Let's go over here to the RVT ratio. So let me actually get rid of, do we want to get rid of that? Yeah, let's get rid of that. So we're looking at two different moving averages on the RVT ratio. The RVT ratio is basically the realized value to transaction volume ratio, which we have, again, the 200-day moving average, which is the more reactive, and then the 200-week moving average, which actually calls all the lows. First things first. Whenever price action gets below the 200-day moving average, well, nasty downs right here. Let's actually, I'm curious where that is on price action. We can do that on BLX, I believe. Let's go to a weekly, get out of my face. And that, where do we get that signature? We get that right here. So yeah, we kind of get like a head and shoulders a little bit now, don't we? So that would be right here to next low. How much do we do on this baby? We do 70% about. What's the next signature? Now we see we get wrangled down below on this area right here, gets stifled on the bull trap of 2014. So let's see what happens right there. That would be correlating with this region right here, this region right here to next low, 75%. Sounds familiar. And then more recently in 2018, it gets stopped at the $10,000 high. And let's see what that produces to the next low. That would be this high right here to next low. Looking at about 68.25%, almost about 70% as well. And now we are once again wrangled below it on that last rejection from, 9,500 we'll call it. So let's see what would be 70% of that. You're probably already doing the math in your head for the math whizzes out there. Something like this. And, well, actually not as much. I mean, 60% would actually put us down in that low 4,000s region. 70% would put us down at the prior low at about 3,100. So fair enough. Could we double bottom? Potentially, yes. I think it's a little bit less likely, but again, within that region, and you actually do see that over time, it had been getting a little bit less over time. So this first one, I believe, was like 75%. This one was 70%. This one was 68%. And could this next one be 60% and kind of line up with those other ones? Perhaps yes. It's worth considering. And then more importantly, or just as important, I should say, the 200-week moving average has called all of the major market cycle lows. So getting this one right here, getting this one right here, getting this one right here, and where would it be in around? Mid to low 4,000s once again. A lot of things lining up here. Let's take it one step further. Let's go to the Bitcoin VWAP ratio. And we officially have something very nasty here. So let me actually zoom in. There's been a lot of requests for this one to make this more clear. I don't have control over this. I can't make this. I'd love it if this background was, I fucking hate this white shit. This is not a racist statement. It's really hard on the eyes. And when you're looking at computer screens all day, it's even worse. If you ever wonder why I'm blinking sometimes, I'm like, ugh, how the fuck do you see this shit? It's too bright. But looking at this right here, let me pan it out and we can zoom in. Actually, first, before we do that, let's explain it. And I'll go through the full rigmarole right now. First things first, there are multiple things to be aware of with this. Look at where my cursor currently is right now. Run a regression right through there, right on a horizontal line. And whenever we have all three of these moving averages on the VWAP ratio, above, we're generally bullish. Whenever they're below, we're generally bearish. This is your bull market right here. This is your bear market right here. This is your bull market right here. This is your bear market right here. This is your bull market right here. This is your bear market right here. Very, very simple. So that's the most simple way of looking at it. Then we look at their positioning in relation to each other. So when the blue, which is the most reactive, is above the purple, which is the middle reactive, like Goldilocks again, and is above the pink, all above the regression, that is your strong bull market where, we go all the way from this price point here to 20,000. That's where we go from this price point here all the way to your next major high. This price point here all the way to this major high. So that speaks to the strength of it. And then the divergence between all of those guys speaks to the length that typically lasts. So these getting a lot of divergence here. This is your longest, run of the upside. This get a lot of, decent divergence here, but it's not, not nearly as long. And then the same thing right here, not as much, but a little bit longer than the one that follows. So what we're doing right now is we've actually seen them all go below the regression line. Very bad. Anytime that they've all been below the regression line, that is, well, this correction here from boom to boom, another 70% correction again. The time before that was this bull trap right here. We've already measured them out, another 70% correction from bull trap to low. Time before that was actually this parabolic high right here to this next low, which was actually another 70% retracement. So we have more iterations actually using this tool. And time before that was this guy right here, going from here to here. Boom, you know, the 75%, or this one was 70%, I believe. And this one right here was like 95%. And now we officially have below. So the next big factor of this is going to be to see if we get the blue below the purple, below the pink. Right now we just have the purple below the pink. So that's bad enough. And that has produced all these massive moves to the downside before, but getting the blue below that is going to likely align with this taking a long time to play out. Long time meaning, you know, well, in the past, you know, like a year plus. Not from the point of that signature, but from the point of the last high. So, you know, we'd be taking it from this area right here at about June 2019. So, you know, middle of 2020, you know, maybe we do see that sort of play out. So remember, like during these trending moves, it takes a long time to first play it out, then level out and bottom, and then reverse. You know, just like you saw right here, we spent about 3 months on the low, 4 months on the low, spent about 3 months on the high right here. You know, same thing, pretty much consistent throughout Bitcoin's history. And of course, you know, remember all of those iterations of that signal. That was first this guy right here, about 67.5%. We got bull trap. I mean, you already know these ones because we looked at all the same ones, but we do have one more iteration. So this one was 76%. We got this guy right here, which called it, which we did not see on a lot of the other ones. So 71.5. And then the time before that was this high coming to low, which was 74%. And then, you know, this one was like 90 or such percent, which is just not really fair. Yeah, 94%. But on average, around 70%, a little bit more than that. And if we take that from the last high to where that could be, where does 70% put us around? Low 4,000. So I do think it's quite possible. I do think it's very possible. And especially considering that we are going to be seeing the monthly close later this week. I believe it is the 24th of November. So yeah, we will see the monthly close later this week. The monthly is going to see the Stokes likely cross down. You know, similar signature what we saw in February 2014 on this bull trap, I believe it was. You know, leading down, again, we already know the percentage plays on that. And more importantly for myself, if the monthly closes below the 10 simple right here, I would, you know, if the monthly closed below the 10 simple, I'd probably look for another test back up to the 10 simple, which is currently at 7,700 and actually will rise. It's actually going to rise on the next tick, by the way. It is a simple moving average, so it is, well, simple. But I would be looking for a little bit more of a fight along the 21 exponential moving average. So, you know, if we do break the 21 exponential moving average, that's where I really do start to look at that mid to low 4,000 region as not just a possibility, but a strong likelihood. So, you know, I'm painting a long-term picture here. Keep in mind that, you know, these things do change, and I'm not here to like scare anyone. I just want to show possibilities. Of course, like we looked at before, there's like three major areas where I think a reversal could occur, or sorry, 4 if you include our current area, which I think is very unlikely, but technically still possible until we actually break below the 200 exponential moving average on the 3-day. And so that's where we are right now, then 6,400, then 5,500, and then yes, that 4,400-ish region that we were just looking at. So yeah, the monthly, you know, if the monthly does close below the 10 simple, pressure will be down. And I'd probably look for a retest of it and then probably continuation below the 21 after that, as momentum also has turned down as well. So, you know, bigger picture is not looking so hot. Let's look at a bi-monthly. Bi-monthly still above the 10. So, I mean, we don't really have enough history here to like give it, you know, too much clout. It's not really fair. What about the quarterly? Same thing. Did we make new lows? Yes, of course we did. You know, and where's the 21 coming in around on the quarterly? Mid 4,000s, right? Anyways, I did forget to talk about the Bitcoin difficulty ribbon right here. We are actually converging once again. And it looks like this was updated as well by Willy Woo. So credit to you, as it looks like we have the halving dates put in here. So we do typically converge into the halving dates, which does produce these pretty nasty downs, but not the same downs that I'm kind of considering right there. remember, as a trader, I take it one level at a time. It's like one level, then next relevant level. Like if that level gets broken, then next relevant level. So while I'm talking about these things, like make no mistake about it, I'm not trading for it right now, but it's in the back of my mind's eyes. I do want to make that clear. How long have we been doing this? Oh my God, already 47 minutes. All right, let's get into Bitcoin dominance and then a couple of shit coins, and then we'll call it a day. Bitcoin dominance right here. Oops, that's not a time frame that's really helpful right now. Ooh, are we going to move down here? Let's see how we close this out. If we do close below the 21, I actually would be looking for a small alt party as we do move down to 6.5%. But still, I would huddle true to what I've been saying for the last couple weeks. I think that we're kind of putting in a local low here, and then we're going to work our way back up to like 69.5, 70%. Do we have any hidden bearish divergence? No, of course we don't, because we're making new lows, so we can't have that. Let's go look at like our general altcoin index, Mr. Cardano, and what do we see here? We got that rally around the 21, as did most alts, and I think that we're going to come back down to the median of the range, of which we've already done actually to 480. I don't really have a strong opinion on alts. I would just say the general rule is that if Bitcoin's not bullish, very, very rarely are alts going to be bullish over a long period of time. And to me, we have a very obvious trading range right here between 540 and the current low at 440. Actually, I'm not so convinced that alts going to be making like new trending lows off of this, but I do think that they're going to fill out the ranges for the next few months most likely. Let's see. Let's go over here and check out the other top two shitcoins. Mr. Butyrol 150, looking pretty nasty. We do have a nice horizontal resistance. Sorry, if we're talking about relevant levels now, your big relevant level is going to be right here to the upside, right around 168. As long as we're below there, not so impressed by it. And our next relevant area to the downside, we actually already took a little bit of a stab towards. Probably do bounce around in this region for a little bit of time. We do see some wicks being accumulated in this region as well. So shorter term resistance at 152.5. If we do break 140.5, I would be looking for a move down in this pocket all the way down to about 125 region right around here. So again, I do think that we spent some time bouncing along with Bitcoin, but trend is very much down, and we just made new lows on the weekly. What about Mrs. Litecoin? What's she doing? Same thing here. Exact same thing, really. What about Stellar? Same thing. God damn it. Sorry. I mean, bless me, bear Jesus. I love you. XMR, Monero, down as well. New lows. Ripple Me Nipples, new lows. No, well, actually, we're gonna have a chance to close on new lows. So if we do close below, like let's call it like 24 cents, then yes, I'd be looking for this trend further down. Next major relevant area is going to be about 19.5 cents if we do get that. Longer term, again, it's not going to happen like today or tomorrow, or I shouldn't say that anymore, man. My timing is fucking awful with these things. My timing is just absolutely terrible with calling those sorts of moves. EOS, same thing. Neo, not the same thing actually, but did hit our $9.50 target, so I do like that, but probably going to follow the rest of the market. Major resistance right around 1030, and next major support around a little bit under $8. Tron Cash down. Bcash, Bitcoin Cash down. Zcash, it's inverted moon, baby. Inverted fucking moon. All right, let's wrap this bitch up. I'm gonna leave you off here. God damn, man, too long of a video. I always get the complaints, but at the end of the day, man, we do these for the technical analysis nerds, the TA autists, of which I am one. I'm probably one of the biggest TA autists myself. But yeah, to kind of wrap up what I'm looking at right now, lower time frames are technically printing an ascending triangle, right? However, like I said, I've seen everything break every which way. If we do break to the downside, I'd be looking for another move back down to 7,000. That would test the 3-day 200 simple, and I would be looking for a move to the upside off that. Actually, I don't think that we're trending down from this region right here. I think it's a lot more likely that we should do bounce up and test around. The next territory is going to be about 75 to 7,600, right? And then if we do get above there, if we can close like a 4-hour doodle above there at the very least, then I'd be looking at a move towards 7,900, maybe 8,200 if things get a little more crazy. Then reassess from there as things could get interesting. But as I said, no real reason for me to be at all bullish, especially as long as we're below the 200 exponential moving average on the daily, because we technically do have a death cross right now. Typically we are going to rally into that a little bit, but we got a lot of space to fill out here, and the 200 exponential moving average is 8,600 now, and then on top of that, no real reason in my opinion to be bullish as long as we're below this lower high right here on a weekly at 95, 9,600. So that's what I'm looking at right now. I suppose I would look for an immediate trending move to the downside if we do close this next 2-day dildo below the 200 simple right here, which is 6,900. Sorry. But I think that that's a little bit unlikely. You know, we could come down and test and that's fine, but as long as we don't close below it, I wouldn't really be looking for the next trending move to the downside. In fact, I wouldn't look for I wouldn't look for the next like leg to the downside unless we like really close a daily, let's call it below, close in a daily below like 6,950. Then yes, I would look for another leg to the downside, and the next target would be about 6,400. So that's gonna do it for today. I want to wish you all on this nice little holy Sunday of red dildos and of death and decay a little bit as well. I hope this video finds you well, and I will be back on for a live stream tomorrow. Looking forward to that. As always, take care, and until next time.